Here we have the 2-hour price chart for BROADCOM Incorporated, stock ticker AVGO. Here we can see that this stock is participating within the broad sell-off that's taking place within the semiconductor industries and within the technology sector as a whole. The declines here have been fairly significant, and we've also seen some price gaps to the downside. So we're really getting into some murky water here. Some very kind of treacherous trading conditions are taking place right now. If you look at some of the prior videos that I've released on NVIDIA and Meta platforms, for example, you'll see that there are many stocks that are kind of falling victim to this selling pressure right now. This is not a sell-off that's directed at one stock or even one sector really, but the technology sector is really coming under a lot of pressure at the moment. And if you do look at the videos for, say, for example, NVIDIA and Meta platforms, you'll see that some severe support levels, some major support levels are being broken at the moment, and the sell-off has been severe, especially in Meta platforms. That stock is in free fall. It's in major trouble right now. So it's not totally surprising to be seeing a sell-off like this in BROADCOM as well. There are not many examples of stocks that are managing to maintain themselves currently. One name that is maintaining itself is Intel. This is a stock that I've been talking about now for quite a while. It's been my favorite long-term play for quite a while, and this is really, it's really one of the only stocks that is holding up at the moment. But the sell-off in Broadcom here is real, and we're now breaking some fairly important support levels in the process. So, the first thing we need to do is sort of look at this price gap that has been formed here. This really kind of extends from, let's get a price low here. 167.95 would be the top of the price gap. And then this goes all the way down to 162.63. So this price gap alone might not seem like a very big distance here. I mean, we can try to move in here a bit. But this is a fairly substantial price gap. And at some point, this is probably going to need to be filled. And what this really tells us is that, we're kind of, we're heading into volatile territory here, much more uncertain territory here. This does make it more difficult to start to identify support and resistance levels that can be used to establish trading ideas. That does not mean that we should not be looking for areas to buy and sell the stock, because these are the types of activities, chart activities, which tend to also present the best opportunities. When we see sell-offs like this, that makes it much easier to get a discount on the share price. So currently, what we have to note here is the fact that we have broken through several important Fibonacci retracement levels. If we're using as our dominant price move, the lows of $1, $130, 22 cents, and the highs coming in at 185.13. We can see that we very quickly broke through the 23.6% Fibonacci retracement, which rested at 172.20. This happened fairly quickly. And then we also broke through the 38.2% Fibonacci retracement before finding some support at this move's 50% retracement. We were starting to see some rallies here at that point. But then, this Thursday sell-off happened last week, and most of the technology sector really started to get punished, probably for overvaluation, maybe going too long without a sell-off. You can come up with any reason you want here. But what is clear is that these sell-offs are broad-based, and this isn't being directed at individual stocks. But currently, we have now started to break through this 50% retracement. That would be this green line here. So at the moment, the only thing that's really holding up prices at this point would be this ascending blue line, this upward sloping blue line, which is the 200 period exponential moving average. So at the moment, I wouldn't really have a lot of confidence in this level alone, especially due to the fact that we're trading back into this gap, which occurred previously. We have to remember there was a much larger price gap that occurred. This would have been roughly the middle of June. So we're currently trading in this area. So it stands to reason that we would have to fill this price gap before moving lower. This is kind of unfortunate here because this does suggest, if that is true, this would suggest that we would also be breaking through the 618 retracement, the 61.8% Fibonacci retracement, which currently comes in at 150. So that really does signal a much deeper decline here. And it does sort of suggest that we wouldn't really see any support until the 786 retracement, which comes in at 141.80. That would be a significant price move lower. It's almost hard to believe that we could see prices fall that far, but there really isn't much holding up prices at their current levels. And then we also have to deal with this fact that this price gap from that that we saw previously has not yet been filled. So that's a problem that has to be addressed. Overall, I'm really not expecting this 200 period exponential moving average to be enough to support prices, given the fact that we had historical support zone here and this 50% retracement, which was not able to kind of maintain share prices and hold off selling pressure. We did fall through there quite quickly, even after this initial price gap occurred. So, to me, this just doesn't look like enough to be able to support prices here. And we still have the fact that, this price gap has not yet been filled. If we really are looking at this price gap to be filled, this is going to require at least a test of 150. That does come in roughly close with this 618 retracement. So I suppose it's possible that you could see some buying activity there. It's also a psychological round number. The market does like to focus on those types of round numbers. But it's way too early to start to advise people to start buying directly into that area, because as you can see in the relative strength index, this long-term upward trend in momentum has now been broken. We can kind of zoom in on this a bit here. We can see that this purple line has broken below the white trend line. And then, in addition to that, the relative strength index, which is the purple line, is also trading well below its moving average, which is the yellow line. So, overall, there's really not much here to suggest that we're ready for a bounce anytime soon. That does not mean that we can't get a bounce out of 150. I would just prefer to wait to see how prices actually behave once we get there, because this price gap isn't exactly filled at that point, and there really isn't any other. There are no other moving averages at that point. We don't have any other Fibonacci support until 141. So, and the overall downtrend in momentum here does remain valid. So, at the moment, my suggestion here would be to hold off on this stock. You're going to have to wait until the dust settles, exercise some patience here, and then we'll kind of see how the stock behaves as we test 150. Here's the current market analysis for BROADCOM Incorporated, stock ticker AVGO.